Peter Eliades with you again. This is the Stock Market Cycles update for Tuesday, November 19th. We're almost there. I shouldn't say that. We're not almost there yet. We are 2/3 of the way through the requirement for a setup of the sign of the bear. We require 18 consecutive days with a single-day advanced decline ratio below 195 and above 0.65. Today easily qualified, being almost exactly in the middle. So that's now 12 consecutive days. A streak like that, I should tell you, is rare. You very seldom get 12 consecutive days. We're looking for 18. So the requirements are stringent. We need 6 more. That would take us to the day before Thanksgiving. And that's just for the setup of the sign of the bear. You don't get the sign simply by the 18 consecutive days. We'll go into that, if need be, at a later time, because we're still 6 days away and we need to get those 6 days. So what's the big deal, Eliades, about this sign of the bear? Show us what you're talking about. Well, I referred you to the research papers that you could read, 2 special reports that I did at the end of 2017, October, December of 2017, that gave you all the information that you'd ever need about sign of the bear. But I'm going to take a couple of minutes today and show you what exactly the repercussions can be from a sign of the bear. This is the first sign of the bear that where the signal was given. Let me say very quickly, I initially did the research from AD data, from advanced decline data beginning in 1940, because I didn't have anything before that. And so I did the research for sign of the bear, and then when I ultimately got the data for sign of the bear, for advances declines going back to the mid-1920s, I said, all right, I crossed my fingers. I said, let me take a look if this thing worked in that time span between, let's say, 1924, 5, 6 and 1940. Ran it through the computer. Guess what we came up with? It was amazing. The only sign of the bear signal between 1926 and 1940, when our old data began, occurred right here, folks. This is it right here. The date was July 24th. That was the first sign of the bear signal in modern data. And so you say, well, that wasn't that great a signal. You think that's a great signal? Look at this big rally here right after the signal was given. Okay, and what do I say to you? I'll give you the rally if you give me the decline, okay? This is the DJIA, and from the high in 1929 on September 3rd, it declined over 90%. But from the time the signal was given, confirmed sign of the bear, it was down 88% to the market bottom. Reason enough to get excited about a sign of the bear signal? Well, what else do you have to show me, Eliades? Well, hold on, I'll show you. I'm going to scroll through the pages and show you when the next signal came. And let me tell you that every scroll I do, every page, is about 3.5 years. Watch how long it took to get the next signal. There's 1, 2, 3. No signals. 4, 5. Look for the red pointing down arrows. 6, 7. Aha! There we go. The next signal came. Actually, that's incorrect. These are signals from the ones I showed you the other day for the breadth statistics that I came up with. That was not the next signal. The next sign of the bear signal occurred right here coming up. So from 1929, the next signal, sign of the bear, came in 1962. This is where it was given, February 23rd of 62. And in fact, a double signal, another signal came on March 27th of 62. Would you call those pretty good signals? In this case, they were given after the high, but before the precipitous decline into the 1962 low. Those were the next signals. What came after that? Well, are you starting to get the feeling that these are pretty good signals? Look at this. The signal came on February 1st, 1966. This is the first time in history, in early 66, that the Dow went above 1,000. People got bullish as all get out. Go back and read the papers in January, February of 66. Boy, was everyone bullish. Sign of the bear was not. This was a signal that was given. Let's go forward from there. When was the next signal given? Triple signal this time, and this one was given, the initial one in October of 68, and then in December of 68, and then again in February of 69. This was a very important top in the market, even more important than it looks here with this decline into April, May of 1970, because the average share of stock topped out in December of 68, right around here, and over the next 6 years declined almost 80%. So we're looking at the Dow now, and you can see that these signals from Sign of the Bear were terrific. So should we show you another one? I don't want to show you all of them now because we don't even have the signal yet. So here's where the next one came. This one was a pretty long warning. This one came 1, 2, 3, about 4 months before the high. So you might say, well, that wasn't that great. But look what happened after that. The next signal came, a double signal again, in December of 1972, just weeks before this January of 73 high. And you can see the decline that followed. So these are, I've shown you, by the way, every instance of Sign of the Bear from 1929 to 1973. There are more of them. We'll save those for a later date if we get closer to a signal. We've now had 12 consecutive days of the requirement. We need 18. So, as I said, we're not there yet. Let's not jump the gun and get too excited about what we're going to show you, because we have yet to arrive there. Okay, the next most important thing, in fact, probably for my purposes of showing off our software, the most important thing is to show you our projections. These are the highest projections outstanding, as you know. It's for the bar projections. We'll show you that one because we haven't looked at that for a few days. This is a nominal 40-week projection. The offsets are 96.8 to 110.6 trading days. And this is what the projection calls for. 3158.63, that's the low side of the projection box, up to 3331.11 on the high side. So that's a big window, but that's what they're telling us the projection is. So we need to get up at least to the 3158.63 area, I would think, and that means we're not finished yet, despite a lot of technical weakness in the market, which we'll talk about over the next few days again. That's the intraday projection. Let's go to the closing projections. That one we've shown you over the past few days. That's this one right here. And if we go back, you'll see how the projection was determined. The closing low in December, this is where it crossed above the offsets. Measure up to, this is the halfway point. That takes you to at least 3135.04 on a closing basis, and up to as high as 3352 or 53, rounded off. So that's what we're looking at. And again, look at this. We showed you this back in late October, the meeting of the lines. It came so very close. Let's zoom in on this so you can get a look at it. It's not there yet, but boy, is it getting close. Here's the meeting of the lines and the projection box right in here. We're right in that time zone where they meet. And the lines, these are the lines, the top lines, one of them based on a closing basis, the other one intraday. So they're up around 31.35 or 40. That's what we look at like. That's what the projections look like. And remember, the important thing to remember here is these are the highest projections outstanding. After that, there are no higher projections. We could come down from here, start up again, and get what I call a loop projection to even higher levels, but we don't have that yet. Let me show you one last thing here, and that is the daily chart of the New York Composite Index. Remember this chart? Look how close we are. This mystical little magical trend line. Now, this is the all-time high in the New York Composite Index. We've never exceeded it, going back to January 26th of 2018. But look where the lines meet. Now, that doesn't mean we're going to stay up this long or that we're going to meet the lines as they come together here. But that happens a lot technically when you have two important lines that meet. So this is right at the beginning of January. The other important point to make is, as we showed you on the charts, sign of the bear doesn't mean that, whoa, we go down immediately and never look back. No, sometimes it's given after the top by a short bit of time usually. Sometimes it's given a few days, a week or two before the top, and sometimes as long as 2 or 3 months before the final top. So the important thing to feel is that we have all these signs and signals coming together around these price levels, a little higher, and around this time zone if the sign of the bear comes through over the next week or two. That's it for now. Go to the bottom right of your screen, subscribe if you haven't subscribed yet. Click on the notification bell. If we do special updates, you'll hear them. Give us some comments below. Tell us how you like these updates. Thanks a lot for watching.